Hello and welcome back to the channel. I'm Algabot, and today we are studying an expert advisor for MetaTrader 5 called Tested Level Breakout. This is a single time frame strategy that maps horizontal support and resistance from confirmed swing pivots, and then watches for a momentum breakout once a level has proven itself over time. There are no oscillators here, just price structure and the average true range. By the end of this video, you will understand how the strategy locates its levels, how it decides that a breakout is worth taking, and how it manages its stop and its target. This is educational content only, so let's get started. Let's start with the big picture of what this expert advisor is built to do. Tested Level Breakout is a pure price structure strategy. It works on a single time frame, and it does not rely on any oscillator, moving average, or momentum indicator drawn underneath the chart. Instead, it builds its own map of horizontal support and resistance levels directly from the candles. It does this using fractal swing pivots. A swing high forms when a bar's high is the strict maximum compared with a set number of bars on each side, and a swing low is the mirror image. The number of bars on each side is controlled by the fractal parameter, which defaults to 3. Each confirmed pivot becomes a level on the map. When a new pivot lands close to a level that already exists, within a tolerance scaled by the average true range, the two are merged together and the level's touch count goes up by 1. In other words, a price shelf that has been respected several times gradually accumulates significance. A level only becomes tradable once it has been touched a minimum number of times, set by the minimum touches parameter, which defaults to 2. Once a level has earned that status, the strategy waits for a momentum breakout through it. The average true range, calculated over 14 bars by default, is used throughout to keep everything proportional to current volatility. It sets the merge tolerance, the break buffer that filters out marginal pokes, and the expansion threshold that defines what counts as a strong breakout bar. So what type of learner is this approach suited for? It is suited to someone who wants to understand structure-based trading and breakout momentum in an objective, rules-driven way, rather than drawing levels by hand. Every decision in this expert advisor comes from a clear, repeatable calculation. Remember, trading always involves risk, and losses are a normal part of any strategy. Nothing here is a recommendation. This is purely an educational walkthrough of how the logic is constructed. Now let's walk through the exact logic, step by step. Everything begins on the close of each new bar. The strategy adds the just closed bar to its memory, recalculates the average true range, and then checks whether a new fractal pivot has just been confirmed a few bars back. If a swing high is confirmed, it registers a resistance level. If a swing low is confirmed, it registers a support level. New pivots that fall within the tolerance band of an existing level are merged into it, which bumps up that level's touch count and nudges its price to the average of the touches. Stale levels that have not been revisited within the level lifetime, 200 bars by default, are quietly expired and removed from the map. Next come the entry conditions, and there are 2 gates. First, the strategy only holds one position at a time, so if a trade is already open, it simply waits. Second, the just closed bar must be an expansion bar. That means its range, from high to low, has to be at least the expansion multiple times the average true range. The default expansion multiple is 1.2, so the bar must be meaningfully larger than typical recent volatility. If the bar is quiet, nothing happens. When an expansion bar does appear, the strategy looks for a breakout. For a buy, it scans tested resistance levels, those touched at least the minimum number of times. The signal needs the prior bars close to have been sitting at or below that resistance, and the just closed bar to close clear above it, beyond a break buffer scaled by the average true range. When several levels qualify, it selects the strongest cleared shelf. The sell side is the exact mirror. The prior close must be at or above a tested support, and the just closed bar must close clear below it by the buffer. Now the risk side. For a buy, the stop is placed just beyond the lower of the broken level or the breakout bar's own low, minus the buffer. The take profit is the next mapped resistance above, giving a level-to-level journey. If there is no further level, or it sits closer than the measured risk, the strategy falls back to a fixed reward-to-risk multiple, which defaults to 2-to-1. The sell side mirrors this exactly. Finally, once a level is broken, it is flipped off the map so it cannot be traded again. Let's read through the actual MetaEditor code shown on screen. At the top are the input parameters. Fractal sets how many bars sit on each side of a swing pivot, defaulting to 3. Minimum touches is the number of touches before a level is allowed to trade, set to 2. ATR period is 14. Tolerance, break buffer, and expansion multiplier are all multipliers of the average true range, controlling how pivots merge, how far price must clear a level, and how large the breakout bar must be. Reward risk is the fallback target of 2 to 1, and level lifetime expires stale levels after 200 bars. Just above the signals, you can see the expansion check. The just closed bars range must be at least the expansion multiple times the average true range, otherwise no trade is considered. Now look at the buy block. It requires a resistance with enough touches, the previous close at or below that level, and the just closed bar closing above it by the buffer. When that is true, the stop is set just below the lower of the broken level or the bar's low. The take profit comes from the next mapped level above, and the order is sent with trade.buy. The sell block is the exact mirror. It needs a tested support, the previous close at or above it, and this bar closing below it by the buffer. The stop sits just above the broken level or the bar's high. The target is the next level below, and trade.sell places the order. Both sides are symmetrical, which keeps the logic clean and balanced. Let's bring this to life on the chart and walk through both a long and a short example, candle by candle. Notice there is no indicator panel beneath the price. This strategy reads structure directly, so the dashed horizontal lines you see are the levels it has mapped from swing pivots. Look at the red line, the tested resistance at 1.0850. On the very first candle, price pushes up into it and is rejected, leaving a wick at the level. That is the first touch. Price drifts lower for a candle. Then on the third candle it returns and is rejected again at 1.0850. That is the second touch, and now the level has met the minimum touches setting of 2, so it has earned tradable status. The strategy is now watching for a momentum breakout, not just any nudge through. The fourth candle is the one that matters. It opens and then expands strongly, closing well above the resistance with a range large enough to clear the expansion threshold of 1.2 times the average true range. Because the previous bar closed at or below the level, and this bar closes clear above it by the buffer, the buy entry is generated. You can see the buy entry marker right at that breakout. The stop is tucked just below the broken level and the breakout bar's low, while the take profit is set to the next mapped level above, the gray line at 1.0895. Now watch the journey. The fifth candle continues higher, and the sixth candle pushes into the next resistance, where the take profit marker sits at 1.0895. That completes the long example as a clean level-to-level move. The original resistance, once broken, is flipped off the map so it will not be traded again. Now the market turns, and we set up the short. After tagging the upper level, price pulls back and begins respecting the green line, the tested support at 1.0870. On the eighth candle, price dips to that support and bounces. That is the first touch. The ninth candle returns and bounces again from the same area. That is the second touch, so the support is now tested and tradable. The 11th candle delivers the breakdown. It expands sharply to the downside, closing clearly below the support by the buffer, with a range that again clears the expansion threshold. Because the previous bar closed at or above the level, and this bar closes below it, the sell entry is generated, shown by the sell marker. The stop is placed just above the broken support and the bar's high, and the take profit becomes the next mapped level below, the gray line at 1.0845. From there, the 12th candle drives lower, and the 13th candle reaches the take profit at 1.0845, completing the short. Both trades share the same idea, a level proven by repeated touches, then a decisive momentum break, with the stop beyond structure and the target set level to level, falling back to the 2 to 1 reward when no further level exists. So that is the Tested Level Breakout Expert Advisor. We covered how it maps support and resistance from confirmed fractal pivots, how a level earns significance through repeated touches, and how the strategy waits for an expansion bar before taking a momentum breakout. We also walked through how the stop is placed beyond the broken structure and how the take profit travels from one mapped level to the next. Remember, this video is educational content only and is not financial advice, a recommendation, or a solicitation to trade. Every strategy carries risk, and losses are part of trading. If you found this breakdown helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment with any strategy you would like me to examine next. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.